Well, hello, everyone. My name is Cameron. Welcome to this edition of Connected by Community, brought to you by Ballantine Capital Advisors. I'm one of your hosts today. With me is our lovely co-host, Anthony Colincheco, and we are joined by Brian Johnson from SuggsJohnson. So thanks so much for coming today.
Hey, guys. Thanks for having me.
Awesome. So I know we're going to get into all the fun things of tax planning and CPA work and all that good stuff. But before we get started, I guess tell us a little bit about yourself personally, professionally, and kind of how you got in the industry.
Okay, great. Yeah. So Brian Johnson, I'm married, got 3 kids, 2 in college. Well, no, I was about to say 2 in college, but one actually graduated, is now gainfully employed. So that's a good thing. Been a CPA for 27 years now. Grew up in Georgia on a dairy farm and knew I didn't want to do that for a living, so I had to decide something else and went to PC undergrad. And after that, I had the opportunity to go to grad school at University of Georgia with an assistantship. And from there, just, got recruited by accounting firms and really got to know a lot about what they were doing. And so I started my career with the Big Four and have then been out on our own at SuggsJohnson for about 17 years now. So
awesome.
It's been a great career, very rewarding.
Awesome. So how was it transferring from, like you said, a large Big Four accounting firm? I know that's kind of the typical route for young CPAs, and then starting your own, I guess. What have you seen from there, and would you change anything?
No, I wouldn't change anything. I actually was at the Big Four, and then I was at a regional firm, and then decided to, had enough experience at that point after 10 years between those two to go out and try to do it ourselves and get a lot of depth of experience with the bigger firms. And so that was very valuable. But then the relationships at the smaller firms and at our firm is that's really what I enjoy, is the relationships, and it's just a better opportunity to continue building relationships at our firm.
Also, what would set you apart from some of the bigger firms?
I would say just that. I mean, I could read you an email that we got this week from a new client who moved into the area, had some really year-end planning issues. I got one of my managers to do a projection for him, and then the two of us called him together and just walked through it and told him, gave him some ideas. And he sent us an email and said, in 2022, to have a partner of a firm be able to call you and talk through this was pretty special, and he appreciated it. And I think that's probably what sets us apart from the larger firms.
Awesome. I know, so I'm originally from Anderson, and our families kind of know each other, and you guys kind of started in Anderson and then kind of migrated to Greenville recently. How's that transfer been? Y'all liking Greenville and kind of getting everything going here? Yeah,
it's been great. We purchased a practice, Lewis Hazelwood's getting ready to retire, looking for a place for transition some of his clients to as he slows down a bit, and met a lot of great people. He's got a great client base to work with, and then meet guys like you all to partner with and continue serving clients. It's been a great move for us.
Awesome.
So I guess it's time to jump into taxes. We're at the end of the year. We're at the end of the year, coming up to tax season. What should some folks start to sort of think about?
It's a great question. A lot of it depends on where they are in life, what stage of their career they're in. But as you and we've talked about prior to this, retirement planning is usually where I start. I mean, if it's a business, even, let's make sure they've maxed out their 401ks. If there's an opportunity that they can owners can pay themselves a bonus and max out their 401ks or look at, profit sharing opportunities, that's usually where we start. Some other firms start with, you buy a truck, a truck's going to depreciate. Hopefully that 401k is going to appreciate in value. So we usually start there. On the business side, we look at, what equipment are you going to need in the next 6 months or so? Let's go ahead and buy it now if we can, get the deduction in this year. On the personal side, we start looking at 529 plans. Have you funded your HSA? Have you done your retirement? Is there opportunity for tax credits? I've done quite a bit in that space this year with some opportunities to buy tax credits at a discounted rate that'll cover your tax liability on the state level, especially, and somewhat on the federal level as well. So really, it's just having that conversation and just figuring out, what can we do at this point. And charitable giving, we do a lot of that. Something y'all are very familiar with, probably donor advised funds. That's a great tool in a big year. If someone has an unusual year, a sale of a business, a retirement or something where they're bringing in a lot of income, maybe some big capital gains, a sale of real estate, you can sort of pre-fund your charitable contribution for a few years and take the deduction in this year when you really need it. And so that's a conversation we have a lot of times.
Very cool. Very cool. So you kind of mentioned something. I want to hit on this again. A lot of young people, kind of like myself, that, maybe have something successful happen. They sell some real estate, they get in a business and maybe sell it. Or they just have a really profitable year on their own. Maybe they're, paying themselves a salary, et cetera. They're like, oh, like you said, I'll just buy a new truck and ride it off. I don't have to pay any taxes. I guess, can you speak on that a little bit? And, sometimes that makes sense. Obviously, we're not giving advice because it's generalized here, but I think a lot of people have a misconception that, just because you write something off, it kind of negates your tax liability in a way. And, obviously not paying taxes is what we want to do, but you got to have income as well to live. So
yeah, that's a good point. A lot of people do confuse a deduction with a credit. So they think they could buy a $50,000 truck and it saves them $50,000 in taxes. Well, that's definitely not the case. Obviously, that lowers your income by $50,000, and then depending on what bracket you're in, so maybe you save 25, 30, 35% of that money, but you're spending 50 to gain that. So if you're spending 50 to save 15, you're still going to have, potentially a big tax bill to pay. And, then it also depends on the type of vehicle you buy. A bigger vehicle you usually can write off faster. But if you don't use it at least 50% in the business, then you can't take some of the bonus depreciation, 179, stuff like that. So, amazingly, a lot of people use their vehicles at least 60 or 70%.
Yeah, right. Oh, I drive it every day.
That's right. Yeah.
This new Corvette, it's really great for my construction business.
Right. And I'm looking at houses every time I drive, so and that doesn't really fly. But so we try to be careful with that. A lot of times it works better to buy the vehicle personally and take mileage, because mileage this year at 62.5 cents per mile adds up pretty quickly. So if you're going with the fuel efficient vehicle, a smaller sedan or something that you can't take the big hit in 1 year on, then mileage really works out well. But yeah, it's something to think about. And you can't do it every year. That's another thing. If you buy it this year and then you sell it next year and get a new one, you got gain on that sale because you depreciated it to zero. And so then your delta and your gain and you're having to go up in value, it's not as big a benefit as
it's not as easy to say, oh yeah, I'm gonna buy a $50,000 truck and write it all
right.
off.
So when you're taking advice from your buddy or
TikTok
or whatever, it sounds good until you get into the details.
Yeah.
As we prepare for next year, we always get this question from clients, and when should they file for their taxes? And a lot of our clients are wanting to get it done as quick as possible. Right. And sometimes that could be troublesome, especially with 1099s not coming out till February. And so what advice would you give clients? How long should they wait? Obviously, you don't want them to wait till the deadline, but right. When should they actually file?
Well, one misconception with that is that it matters to the IRS. I mean, you hear people on both ends of the spectrum say, well, I never extend. I'm not going to extend because that makes you audited. And then you have others that if I don't file mine until October, that gives them less time to audit me. Neither is really true. I mean, I've never seen a correlation in the date you filed versus if you were audited or not. So from my perspective, as soon as you can get your information together and you have your 1099s from your investment advisor, get to your CPA. Because if you wait too long, it puts more pressure on us. We love people that come in February. I mean, February is so much better than the end of March.
Yeah, they're coming in with 2 weeks left. Like, hey, we got to get this filed. I hope this is fine.
Right. And if you think about it, you're getting in when there's less volume. There's even more time can be spent. Your CPA is not as tired at that point. Generally, if we're not perfect. We're going to make a mistake every now and then. And usually when we see a mistake or get a notice for something matched up, we're like, when did we file that return? Oh yeah, April 13th. So there's some correlation there.
Speaking on that, on the business side, I know you guys obviously do a lot on the personal side, and it sounds like you do a lot for small business owners and even larger business owners as well. I guess, can you talk about your breadth of services as well, and maybe who your kind of niche clientele is?
Sure. Yeah, small business, I say is although that's a broad niche, then that is kind of where we can add a lot of value because, you're looking at the business owner, you're helping them in their business, you're helping them with how that translates to their individual tax situation. You're concerned about things other than just tax. I mean, you're helping them grow the business and be more profitable. So we have a client accounting. I can't even say the word. It's a new buzzword. We used to call it business services, and now the industry calls it client accounting services. So it's basically your outsourced accounting. So we have a department of 6 people that do that, and they, that's your payroll, your sales. We don't do a lot of payroll, but payroll tax return assistance, sales tax returns, after the fact bookkeeping, assistance with QuickBooks Online. That's really a lot where small businesses are going now. They're signing up for QuickBooks. We can log on, they can log on, we can see it together. We can help them with that. We have a department that does that. We have the audit department, that assurance. So if a construction contractor or a bank or something is requiring you to have audited or reviewed financial statements for licensing purposes or debt purposes, we have an audit department that provides that assurance services for them. And then we have our tax department that, and there, we don't specialize a lot, but we do a lot in the construction manufacturing space. We do a lot in the professional services, doctors, attorneys, dentists, that kind of space that we're able to help out with.
Yeah. So something, even on the individual side where you can still add value, it's more than just, doing the standard deduction and kind of walking away for the most part.
Right. Yeah. There's a lot that you can do from the business side. So if you're someone that you're employed by another company, you have a W-2, you have some charitable contributions, some investment. Yeah, there's some planning that can be done there, but there's not a lot of movements a lot of times that you can do. But on the business side, you have your equipment purchases. I mean, you may want to slow down on your invoicing at the end of the year, speed up on if you're cash basis, speed up on paying your invoices at the end of the year, just to kind of control that bottom line at the end. Within reason. Obviously, you can't do anything that's unethical, but you can, if your choice is to, hey, I'm going to invoice that customer today or on December 26th or January 2nd or pay that bill at the end of the year or the first of the year, then accelerating those expenses into this year in a big year can help. So, it's those kind of things that we're doing a lot of this time of year. We're making the phone calls and checking in and seeing, where are we at for the year? Have we maxed our 401k? Have we considered profit sharing? Do we need any equipment? Don't buy equipment that you don't need. But if you're going to need equipment within the next 6 months, now's probably a good time to do it.
Yeah. So I guess I have a 2-part question that you kind of mentioned too. You mentioned QuickBooks and accounting software in general. I guess how much has that helped your practice be more efficient and offer obviously good results? And then what do you say to the people that are like, oh, somebody has a business that's got more stuff going on than just, like I said, a W-2 with a standard deduction. Oh, I'll just fill it out in QuickBooks and hit submit and we'll be good to go for next year. I guess, what do you say on both sides of the spectrum there?
It's a great tool from a small business perspective, and especially the online version. So you can share the information back and forth with your advisor. So, you're not doing something the wrong way or the way that's not helpful all year and then sending in your QuickBooks file in February and hoping for the best, so being able to log on and look at QuickBooks, check behind a client, show them the right way to do something in January, February, so that they're not doing it wrong for 12 months has been very valuable. And as far as being able to prepare a tax return yourself, some people can, and if they're very simple, that's not really who we're set up for anyway. But if you have a lot going on, you can really answer that question any way you want to. And how would you, if you're going through a TurboTax or something like that and answer the question and you don't know where it's supposed to end up on the form and it's purely reading it by your answer there and you don't know what the outcome should be, then that can get you in trouble sometime.
Yeah.
For a new client that comes to you, what's sort of the process? Do you have a team that sort of works on new clients, and when would someone with your expertise sort of get involved?
Good question. Yeah, we have 5 what we call tax managers, senior managers in our firm, and every new client that comes in the door is assigned a tax manager. That's kind of their point of contact. So we'll onboard a new client. We'll get a copy of their prior year return, see what it looks like. If they're coming in this time of year, we usually try to get a pay stub, or if they're a business owner, the year to date financials, and kind of see where they are from that perspective. And a lot of times the manager, they may assign that to a staff, but they'll get a projection done and look at it and see if there's anything we can do with the client before the end of the year. They bring me in sometime a lot of times with the retirement plan discussions, just because I have those discussions a lot. I'll come in if we're having a choice of entity. Maybe this year we got a new client that is currently a Schedule C, so a sole proprietorship, and they being pretty profitable. So should we look at maybe doing an S corporation for them and paying salary and planning that way instead of. So our managers are very talented. They're very good at what they do, and so they don't have to get me involved. But sometimes it's just that comfort level a little bit to have discussions with clients.
Yeah, I like how it's a team aspect too. And that's kind of how we run our business as well.
Sure.
It's a team aspect. I equate it to a doctor. If you had a huge major surgery coming up, you want one doctor looking at it or two, or same thing with CPAs. You want one CPA looking at your return, or you want a team of 3 or 4 or 5, just to kind of, catch things that somebody else might miss.
Yeah. Every return that comes through our office is going to get at least 2 sets of eyes on it. Most of the time 3, because we're going to prepare it at the staff level and, use their abilities, their lower billing rates for some of the, data entry and stuff like that. And then they're CPAs in training as well, or some of them are CPAs. And so they're looking at it, and the managers are assisting them and reviewing the returns. And then, my partner and I do a lot of the higher level at the end and when we sign the return. So you're getting at least 2 or 3 sets of eyes on a return. And you're right. It's good to have that second opinion.
Awesome.
I'm going to ask a fun question. Right after April, what vacation do you take? We hear about all these CPAs party after
the horror stories before. Yeah. You guys have fun.
Yeah. With kids, I haven't done a lot of the older CPAs you hear, well, after next week, I'm hitting the Bahamas for the next 10 days and you won't hear from me. I'm not taking my phone kind of thing. And I haven't done that. My youngest is 15 now. She's still in high school. So, they haven't seen a whole lot of me in the last few months leading up to the deadline. So I haven't just disappeared, and my wife and I haven't just gone away. So we usually wait and plan the vacations around kids. But we're part of the BDO Alliance now, which is BDO is a 50th largest accounting firm in the world. And by being part of their alliance, that we get some of their training materials. We have their expertise when we need it. And it's been very valuable to us, but they strategically put their their annual meeting right around May 1st, and it's in Las Vegas. And
so you go out there for business.
So go out there for the purely business meeting right after that. So that's been pretty fun.
Awesome. Well, I guess we have a signature question that we always like to ask. Anthony, you want to ask that for us?
Yeah. What makes you tick?
Ooh, what makes me tick? Professionally, what makes me tick is helping people. I'm, for better or for worse, I'm a people pleaser, which sometimes gets you in trouble. You're trying to, you overextend yourself. But being able to help somebody, whether it's a large sale of a business, multi-million-dollar sale of a business, and getting a good result from that, or whether it's a widow that has lost her husband and comes in, it's not a high dollar thing, but it's somebody that, she needs help navigating the probate process and getting through that. Both of those are rewarding. And so professionally, being able to help in situations like that is I really like. Personally, it's seeing my daughters succeed and what they're pursuing. And they're smarter than I am. My wife has done a fabulous job raising them, and they're to be, good students, good, strong faith. And I can give all that credit to her. She's done a great job with it. But just seeing what's next for them is really rewarding and exciting.
Awesome. Well, I guess we didn't even ask any of them gonna get into the CPA world. Maybe come work with their dad.
My middle daughter Emma is an accounting major at Furman.
Okay.
Right now, she's the only one that's looking in that direction at this point. But so we'll see.
Awesome.
I know my oldest has no interest in it whatsoever.
She'd have a good mentor, I guess. She'd get to come in and see how it works.
Yes,
Awesome.
she's answered the phone in the office and stuff like that for us before, and seen how exciting the industry really is.
Yeah. Awesome. Well, thanks so much for coming on today. I guess tell our audience what's the best way to get a hold of you. Obviously, with tax season, quickly approaching, if they need some help.
Okay, our two locations are in Anderson, 107 Edgebrook Drive, and Greenville, 862 South Pleasantburg Drive. Main office number, 864-226-0306. That's the best way to reach us, and one of our Mandy or Caroline will direct you to me or to whoever you'd like to speak with. And our website is SuggsJohnson.com, so you can get our contact information there. So thank you guys for having me. It's been great.
Yeah, thanks so much for coming on, and looking forward to an exciting tax season.
They come around quick these days.
Awesome. Well, thank you guys so much for tuning in to this edition of Connected by Community, brought to you by Ballantine Capital Advisors. Until we see you again, go out and make our community great.